You with the Crypto Sniper. Time to talk about Bitcoin. Time to talk about those key levels of significance that we've been telling you about, the 42.5 and the 47.5 that very few others are mentioning, and what's happened and why actually you may in fact have a pause and pullback and sideways and down and a little bit less of feel-good factor for a spell. Yes, the fundamental reason for that would be the utter fatigue on the Bitcoin ETF, that is, buy on the rumor, sell on the fact. Eventually, after lots of stop-starts, fakery and nincompoopery and who knows what's fact or fiction anymore, with X accounts, etc., you have your Bitcoin ETF. What in fact happens is people accumulate in advance of. Nobody wants to be late, nobody wants to buy the high, and crypto peeps are learning for the first time that legacy city saying of you buy on the rumor, sell on the fact. What do we have? Let's have a look at those charts. Bang! Let's go straight up to the weekly time frame on the Bitcoin charts. And what are you actually seeing? Why do we do big time frame charts? We do big time frame charts for the candlesticks and what they will show you in terms of the price action of the moment. What, to those of you that are watching right here, right now, what is that fella? On its own, standalone, it is known as a shooting star. In other words, you have had a lengthy period of up. We had here up from the lows of 16 that was called by the head and shoulder. We had this pause period, another period that was a little bit weird and was a little bit disconcerting. We were on the wrong side of that. We thought you had a risk of downside. Then the ETF fundamentals came in here and it was back to bull. We are generally, our overall view macro is this is a bull, that was the low. However, in early stage bull markets where Bitcoin dominance has actually been the thing, we'll take a look at the dominance charts in a minute, but the key thing was being in Bitcoin and riding that up. What you have is in those periods you still have pullbacks. We haven't gone parabola. We're not here at this point of the market. You don't want it to be at that point of the market because the game is ending. When you have those two moon shoots, the next thing is a very big nasty slap on the face. Don't forget 64, next thing you knew 29. Some difference, more than half down. 50% pullbacks after major blow-off periods. You're getting a blow-off period in uranium just after meeting all our targets. It's a great place to take some profits potentially. Anyway, we're not here for that market. We're talking Bitcoin, shooting star, pause, potential for lower. You could have even a good candle, it could be a hammer candle, and then rally back up, and you could have a lower wick. If you are leveraged, if you are oversized, you could get hurt during this period as Bitcoin gestates. That doesn't mean we are calling a bear market. People are exceedingly binary. This is a macro bull market, just like this turned out to be nothing more than a pullback period with a churn and a ledge that eventually reasserted to the upside. These bull markets take time to play out. You aren't even at legacy highs yet. So technically speaking, it's still reasonably early in the Bitcoin bull market. However, what happens for a while, most people's time frames, they think they're long term, but their decisions end up being short and medium when there's fear. Oh dear, I don't want to be holding now. Ad hoc, little bit of fear, money account go down, watching the money, going down, panic sell out at the bottom. So you aren't matching your actual trading that you are doing by order to what you are alleging your time frame is. If you're long term, then most people should be investment, and that's it, and let it go, and you ride the down with the up. That's fine. That's what they call the hodl. If you're using a little bit of trading and you're using a tiny bit of leverage, you tend to chase in at highs and get flushed out at lows and actually do damage to the hodl. That's why most people shouldn't be trading, because they lack method, they lack market understanding, they don't add value, they destroy value in terms of what goes on in the markets. This is going to be another spell. Doesn't have to be anywhere near as long as this, by the way. I don't think it will, of congestion. Why? Well, you've got to remember, apart from those fundamental points that I've already made, is that the technicals so far, as you've had an ETF run of 1, 2, 3, 4, 5, 6, 7, 8 days in a row of properly up. Then it was the backwards and forwards. with the news, wind up, and then you push through to the next level. Let's drop a time frame and remember that the candlesticks on the big time frame are talking about potentially lower and sideways and down for a time period. Who knows how long? I'm not expecting anywhere as long as before. So we dropped the time frame, and I want to also talk about, before we go down to that lower time frame, the key levels of significance. We make a lot about what we've called on Bitcoin so far about the key levels. And we talked about 25K, how after breaking it, it became support for an extended period and you kept coming back, but eventually you blew away. Then you had the 42.5. We spoke to you about the 42.5 likely being run on this target. This is a target from the smaller inverted head and shoulders. I took it off, but we need to remind everybody in the blue, left shoulder, head, right shoulder, breakout event. That was that target. And we said the key level that you're likely to overshoot, you might need a wind up for the next level, but the key level that you're likely to overshoot on the 40.5 is 42,500, because it's only $2,000 away, and typically you finish to target with momentum. That is exactly what happened. The 42.5 was run. You then went sideways. It's the first time you're starting to get some red candles. 1, 2, and of course the current one, 3. However, in that process of winding up, you spiked through what level? The 47.5. 2 key levels that we gave you that were going to be seminal, and we said a long time ago, way back down here, that on the run of the 47.5, which also catches the apex of this bear flag on the way down, so many levels. Don't forget those 2 numbers are necklines of the 2 book-ending head and shoulders, 42.5 and 47.5. How many technical traders are you watching? And we mentioned this not to aggrandize, but just to highlight the value of this kind of analysis, are telling you about the 2 seminal head and shoulders of 64 that took you to 29, and the 69 that took you all the way for the 16K run that called the bottom. That bookended. Those 2 most important price levels are 42.5, the 69K head and shoulder that gave you the 16K bottom low, and the 64K head and shoulder that had 47.5 that gave you the 29K run to the downside. Only HVF method says key levels of significance must be projected. They will be futurely significant again on the way back up. These have been the fat blue lines that we have been putting on these charts since the beginning of October last year, when this was first starting from the break. It actually was, we were in a head and shoulder break way in Q1 2023. When thinking and talking and preparing you, we said take money off if your time frame is not hodl at the 47.5. In other words, you would have sold the wick of a shooting star and will avoid the downside, sideways, cost of hold if you are got light leverage for what could be an extended period for some time, yet have opportunity to reaccumulate that for the macro bull potentially significantly lower down, thereby making profit again on the same run up to 47.5 at some point in the future when it reasserts to the upside, because we are still macro bulls. We just recognize when leverage trading to the long side will work against you rather than for you. Everybody understand? Comprehendo. Let's drop down to those smaller time frames and understand a little more about those 2 key levels and how we have rocked and rolled. By the way, you also would have noticed, I've got to go back to the weekly again, huffing and puffing. The orange inverted, we actually called for you here, and I've had to move this line. We called for you a right shoulder. So I've moved it out the way so I can see the charts, but it was literally here. A right shoulder potential on the 47.5, and we gave you our biggest forecast we've ever made for Bitcoin in our time, and we have said Bitcoin to 145,886. Now that will only be about 2 and a bit more than the 69K. Remember, 69K is only 3 and a bit more than the 20K. So there is a slowing. You know, these guys that have thrown out 1 million target, 2.5 million Bitcoin, 10 million Bitcoin. Maybe not so quickly in such a hurry. So we have technical targets, we have real numbers all the way up, and that is the potential that we see that is in existence. And we have been talking about this structure for some time as well. Go and check the Crypto Sniper legacy videos when we threw out the 145 as the next significant key level. Of course, taking out the legacy highs of both 69 and then the secondary high of 64 will be significant, but I put it to you that the two necklines of performing head and shoulders are actually the biggest numbers that you are facing right now, more than even the legacy highs as per HVF method. So dropping back down as we've been threatening to do for a couple of times now, what happened? So you ran 47.5. Let's go actually to a smaller time frame. In fact, we go right down to, you guessed it, the 4 hourly. So first of all, after running the 42.5, can you all agree that the stuff we talk about is pretty damn on the money in terms of key levels of significance? We tell you how you break key levels of significance. You go through a firing order. First, you're afraid of it. You go up to it. You just run it. Then you pull back sometimes. That's called like a break and feign back. Then when you break it properly, you break it with momentum. This was kind of a break with momentum. This was kind of a feign over here. So that's what stage one, broken with momentum. Then you dovetail around it. In other words, you integrate the level equally, where you are a little bit above, a little bit below. We call the sine waving or dolphining, where you're jumping above the waterline and you're below the waterline, above the waterline, below the waterline. Eventually you leave and now it turns as support, break out, support. So now that level is support and you grind higher, support. You make on a feign and break basis the next key level, a great exit that we gave you in April of 2023. 47.5 will be a seminal rest point for Bitcoin. We told you, we've been telling you these same numbers if you're regular watchers. There, bang, you've got one of the best exits. You then go, it would have been all green. You would have said, damn, he was wrong. It's all green. And then smash. That still turns out a great exit. That still turns out a great exit. What happened? Squeezy, Japanesey. Let's draw it with the straight lines. Squeezy, Japanesey after the 47.5. You should be biased bear. Quite high volatility. I warned the community that don't take that too seriously for upside, can break to the downside. We've run the key 47.5, regular updates in the community as to why this level was a seminal level and you should be winding back. General caution. By the way, alts doesn't mean that they are all going to die now because Bitcoin's down. You're going to get a little bit of a drift off in the dominance. That's what we're going to see. So alts also get pulled back a little bit, with one or two of them actually made some runs. We talked about Ethereum and why Ethereum will do just fine. But now that Bitcoin's had quite a strong sell-off, there's a little bit of a cloud over that alt run movement. Where did it support? It supported on the legacy level you were given by us. It's supported by the legacy level you were given by us of 42.5. You could now have, you could even have a short-term reversal. Remember that orange draw of a rounded shoulder, a right shoulder for your 145, joining all the dots. There's no such thing as price behavior, bad price behavior. Oh, I don't like it. He's a bear now. No, he's not a bear. He's telling you short and medium term is no longer so favorable. Macro is better than it's ever been. You're marching towards delivering an inverted head and shoulder, which will require some downside for it to be a shoulder relative to the proportionality of the previous shoulder, because we need a good structure. So that means potential downside, quite a strong rejection. Not one candle on a 4 hour. Let's just be clear. We gave you 47.5 as a logical, if you have a medium to long time frame view on Bitcoin, but you're not a pure hodl and you want to add value. This is with HVF method, as we do in our community. Link below, first one in the description. Why don't you click it and book a call so that you can have the confidence and faith to actually implement some of the things we are showing you to be true that we told you before it actually happened. Makes sense to me if you see something work in practice. That's why we do these free views, so that you can see us say certain, are we always right? Nobody's ever always right. Nobody is ever always right. You get to be slightly more accurate. And the compounding effect, if you haven't read the book around micro habits, which is about compounding super small gains every day. It is not big days that make you great. It is small compounding habits over long duration that compound with you. Warren Buffett only got to be as rich as he was after 60 years. He was sub $1 billion before 60 years. It's the fact, 60 years old. It's the fact that he's been in the game 80 years compounded. You've got to understand duration is the great gift. Do exceedingly small things, but do them consistently every day and integrate it as your lifestyle and part of your habits. And lots of small little things compound in your favor. Not getting the washout, buying, just taking close to the tops. Look at those wick calls and then getting back in lower down. You may get, and this is a possibility, not a call, you may get on this kind of a time frame, a left shoulder. You could get the complex head over here. You've come down pretty hard. You could get soft rally, and you could even get a head and shoulder type structure that could bring you deeper down for that right shoulder. And everyone's going to go, he's calling a bear, he's calling a bear. It's binary. You light on, light off. No, it's by time frame. It's by time frame. How low did the orange shoulder on the left shoulder go? For that, we have to look at the bigger time frame chart. We go back up. Understanding key prices is very important. What is the low there? Let's just pull that in. I've got too much other information. I'm taking the lowest moment of that candle. The lowest moment, you can look at it, 32,900. Now the right shoulder generally doesn't go as low, but you can understand there could be scope to even fall below the 40s. That doesn't mean it has to, it doesn't mean it will. We will see if any patterns finish. I've already given you one possible pattern, but they don't always happen. As you saw here, the 25 turned into consistent support. It didn't head and shoulder. Just because you get two bumps in the road with the second one slightly bigger, and then you think you've got a right shoulder, doesn't mean you always break. The support of 25K and the macro bull bias overcome that. The fundamental news of the ETF and Bitcoin being likely passed for it and everybody surging into it overcame that, and this just turned into a pause period before further upside. So again, you could get some downside. We drew it roughly like that. That's got about a 37 low. Let's have a look. What's the low? But I think you could be within that. You could still get a legit right shoulder. Now, what does that leave? That leaves us with armpits over here at the 47.5 and another one here with the rejection. Now you'll note you had some complexity. It's not simple. This was a zig and a zag, and in actual fact it was a flag as well on the bear side. You could get a bull version of the flag. It's quite common for what happened once before to be repeated. You could get an upside HVF. You could get a bear flag like this with zigs and zags. Is it going to be profitable for you to be trading in these market conditions generally to the long side? Overall, no. But when you get back up to that 47.5, that could be a very good triggering event for a momentum break, as according to the laws of HVF method, you will learn with us and watch us implement in the markets as we take you through maximizing your wealth in this crypto bull market with lots of little compounding improvements that see number go up each time with a multiple on multiple, and 10% extra there and 20% extra there, and not eating a 5% loss there and gaining a 5% there. Compound, compound, compound. All so much so that real smart people that understand a couple of decisions better taken over a full year can mean the difference between 3x on your pot and what you would have achieved on your own. But our program's too expensive. It's not expensive at all, and there's different options below which you can participate and still get a large amount of the value add. Okay, so that 47.5 will become critical, but this period overall is not going to be an awesome period. There's going to be a little bit of staleness. But anti-fiats, little bit of good news, because some of you will again still characterize me as bear, is that, and we're not, is that the gold market is setting up just dandy, and that overall fiats in time are going to continue to lose ground to gold, in our opinion. So we feel gold is setting up for another major move that's going to take it up to 2,200, and that could be the point when, just after gold, because gold is the boss over Bitcoin. Yes, it was. It started the move even before Bitcoin started its ETF move. You could then start to see Bitcoin start to reassert and make that move for the 47.5 whilst just stating and coming off for a while. So the anti-fiats God market is looking after Bitcoin. It won't be too severe. So if you're just a hodler and you just want to hodl, you can muddle through. But I would say to you, having sold at 47.5, you may even get an opportunity to buy with a number starting with 3 or a very low 40. Is that not worth taking? Does that not give you more Bitcoin? It depends on whether you have method, understanding, and apply it in a disciplined way. What kind of year do you want for 24? A methodical, disciplined, compounding small increments in your favor, or just a blind hodl, or just hey, I want the excitement, thrills and spills of leverage trading, and I'll always be a little bit confused as to why my number is not nearly as high as it should have been after Bitcoin's gone up. You get to decide. In the absence of plan, you're in the last category I'm just describing, which Richard Hart and many others correctly say most people shouldn't be. That's right. And if you don't want to be those guys, you need real method, interpretation, and a community to help you. So gold is supportive long term, but still a bit choppy. Got to make a third impulse, got to come a bit down. It's not ready just yet for that up move, and Bitcoin will likely lag it. So there's space for Bitcoin to gestate, but not forever. That's why I say it's no great calamity, but selling at the 47.5 would have done you really well. Let's pivot to Ethereum, just to change tune for a bit. We've seen our gold. By the way, that support at 42.5 after making 47. If you can't see the significance of the overcoming of 42.5 and then the run of 47.5 and then the slam bank down to 42, nobody else, I'm here to guarantee you, others will talk about ranges in and around here and all of that. Nobody else sees the key level of significance as being that which occurred before and was totally significant through the head and shoulders. It's only us who's talking about these levels exactly as they've been portrayed. And that exit on 47.5 is amazing. So let's have a look at total market cap, changing speed a little bit. How does it look? Well, before I do the daily, let's just throw on the weekly chart as well. Is there much? You've got to remember, in total, it's going to be dominated by, you guessed it, BTC. Now the only difference is this shooting star doesn't have a red body, it's got a small green body. Why? Because Ethereum popped up, the next biggest, and a couple of alts have also moved. But this is a rejection sell-off. So this is all crypto by all market cap. So you can see many other ways of looking at it. This is typically a pause. And this was a bull run. That was a bull run up to there. This was sideways, final blasting, finishing off marginal highs. This was slower. This last phase was slower. We'll show you on the lower time frame, but you can appreciate it was slower. This is your broadening structure after your up leg. That's what happened. So let's take it back down to the daily and have a look at total, which includes all of them. How does it look? Can you see that broadening structure? Yes, we've got to compress all of that on. Here's your fast period. There, particularly, that wasn't too bad. Out of the HVF on the total market cap, yes sir, be long crypto. Out of this little squeezy, scratching up a little bit higher, eventually getting a target. Lots more slam downs here. Lots more slam downs. Overall, if we were taking those last levels out, this is your grind. The dominance is not there. The power is not to the same degree. This was a winding up that was going to give you extra pace as part of a traditional HVF continuation structure right there. This is fatigue, where there's limit buying by some big players that didn't have enough, but you're failing to get significantly higher. Lots of selling wicks on total. What about total on the smaller sides, excluding Bitcoin? Can we have a massive ass run on the others without Bitcoin? So again, we have a look at the charts. Have a look at it. So the weekly here is not a shooting star. It's not a shooting star. However, there's an accumulation of selling wicks across the top. There. A great amount of selling wicks. Initially, they were buying wicks over here. They were saying accumulate, but we're starting to get the bigger selling wicks on the high side. But it's not a shooting star. So you may see that the alts do okay, but if Bitcoin is heavy and corrects to the lower 40s, or even a 39 at some point on that head and shoulder, it will drag down the alts. Unless news specifics of an Ethereum. So Ethereum is far more one step removed from the ETF. Much less money is baked into an ETF for Ethereum than was for Bitcoin. Bitcoin is now sell on the fact. If Bitcoin got one, the question then becomes, so what about the other tokens now? Can they get? And we covered Ethereum for you in this particular call, by the way, and we did this call with you. We did an update on Ethereum, and this gave you a beautiful upside HVF. Let's draw the HVFs for you. The setups over here, this one was on. Let's put them on for you so that you can see how Ethereum has gone. And many people were highlighting, oh, but Ethereum hasn't moved. And FBTC was giving way to the downside. Look at this upside HVF. That's your number one and out. So of course, after a target, progress decay. That 47.5 is like a super target for Bitcoin. You ran the 40.5, the actual inverted head and shoulder target. You took out the key level of 42.5. You then had to wind up for a while to touch on a wick level 3 times on a wick. You didn't get a 4-hour candle that closed above 47.5, but you had 3 clear-cut opportunities on lower time frames where you would have been taken out on 47.5 on the Bitcoin. And the same thing happened here. This became a little bit of a resistance, and it hung heavy, and it dovetailed around it, a little bit above, a little bit below. And then we drew this one for you, and we shared it on Twitter. Are you following us on the Crypto Sniper? Yes, that one went in there. In terms of that setup, where did it give you the target? Right there. You could have bought there and you smashed it. You should have sold 2,400. You should have sold at the 2,400 mark. And did you? Well, if you did, you did very well, because again, on a 4-hourly, you've not got much time above. Now, this is a little bit of, if you want a fundamental narrative, once Bitcoin is getting clearly likely to get announced for its ETF, people start asking who be next. Some have already positioned, obviously, for ETH. You could also be looking at XRP or others that are big caps. Go through the market cap of the big ones. They're the most likely to get ETF love if the game is institutions and ETFs. However, having swallowed Bitcoin and most people wanting Bitcoin initially as the biggest, most liquid one, they're a bit bloated. And a bit constipated. So they're sitting there and they've got to digest that for a while. So there'll be smaller pockets of money. However, the market cap is smaller. That will chase the next ones potentially. And I would imagine that this move may have had some ETF institutional buyers' interest involved. You smash, you had again 1, 2, 3, 4, 5, and quite a bit of time above the 2,400 to sell your ETH, and it smashed it. This was our target time frame. It actually could be moved all the way there, and it was done and dusted super quick, well in time. I need to take that magnet off. to give you a really fast line of efficiency. What does line of efficiency mean? It means how quickly you get your capital back and your objective was achieved. Super fast, low time frame. You could have used margin, you would have low elements of cost associated with it. You could have paid off that margin, you would have all your profits back in, capitalize it, and you would be then ready. What's happening today? You're lower, you're 2,300 lower, and you would have got much tighter. I had a great trade with Ethereum. I had a fair bit on, and I've literally cleared it all out at 2.4. However, there is a bigger Ethereum, and that's where we showed you the Ethereum Euro. Again, we're not being bearish, we're just telling you bit of progress decay, sideways dull, like you had over here. We weren't bearish during this period either. It was churning, gestating, and waiting. I don't feel this is going to be an extreme dip, but it is going to be a pregnant pause of generally chop, dull, and grinding down a little bit. You're going to see some lower lows overall for the likes of Bitcoin. Maybe a bit less for Ethereum because of what's still to come. Maybe some other macro market caps. But actually the big market caps outside of Bitcoin are going to be the place to be. I don't think you should be chasing tiny cap, micro cap, XYZ. If it's the institutional, if the narrative is to be institutional money getting involved, and retail's done moving and holding up markets here. We're a spend force. We're kind of all in or not all in, but we're not a big significant amount. It's new money you want. It's the institutional element, and it will come through the big market caps. Think of the Magnificent Seven. Take them out, and the S&P's actually down on the year, despite its appearance of being up. Why? Because the big statist cap controlling corporations are the ones getting the money, getting the data, having all the cross sells, getting all the government contracts, getting all the military industrial contracts, putting all the servers up, getting government as clients, etc., etc. They are serving the state and statism as well as you, and that's where the largest is. These guys are running up debt and spending like drunken sailors. You don't get the privilege to do that. Okay, so in the same way, the larger cap are going to be the liquidity and the good performance. Of course, you'll get a better chance of 1000x on something tiny, but good luck trying to pick it out and having the liquidity to sell. Okay, so that's Ethereum. That's what we've discussed. What else did we want to talk to you about? We've spoken about gold. I did mention the Bitcoin dominance, and this is going to be a period where I think the Bitcoin dominance will cycle back a little bit. Don't forget, also, nobody else that we know has been given you the playbook on Bitcoin dominance and the new highs. Since the breakout on this orange box, we said this is going to move away and Bitcoin will lead. This is all part of the ETF money. It was being baked in here from when it came off the lows in November 22. All of 23 was bringing it up to the high side of its range and then taking it beyond. So that is the weekly. Let's have a look at the daily. This looks like real rejection. Don't forget, you crossed 55%. We pointed out that would be a key level. It's 10% beyond half. 55, a real key level on that one. It's not going to hold that degree of dominance, I feel, now that the ETFs and the new release of new ideas are all going to be generally coming for the other tokens. It's already got its prize. It doesn't get a double prize. Slam down there. You had a snapback rally near the end for all the late entries on the ETF, and that's got absolutely smashed. So overall, it's more likely to run these levels for new lows and a test of the 50% than to run those. Warning, remember I told you the BTC maxis are going to be annoying. They are going to be the ones carrying on. That came from all low in that orange box, all the way to the high side of the orange box, all the way to new highs for dominance to 55%. That period now is going to pause. They will come back down. The maxis will not have it all their own way, and some of the alts will do better. However, if Bitcoin comes down too hard, it can rain on the alts parade. It is the God market, remember. So it's that later period where you get super overperformance from the alts to Bitcoin is yet to come. That's more medium term, mid bull to late bull event. Don't wish for it, because the party's closer to being ended than it is to being started. And you've got to stay in the game. You've got to keep building your pot so that you have the biggest pot for that blow off phase. And then you have to get out. It's the difference between getting out at 47.5 and 39 in a week later. It's huge. It's huge. It's going to take it away. You've got to understand this. I'm trying to help you be better. I'm trying to help you maximize your Bitcoin, your crypto wealth during this bull phase. It's as much for me as it is for you. I am reasserting my own disciplines and how I am doing it and serving a community to do that. The link is below. Okay, so you've heard it from me, what we feel it's saying. Don't post in the comments, so you're bearish now. If you are, you're a clown. Okay, macro bull, short, medium term pullback. Bitcoin particularly to potentially underperform for a while longer. You'll probably get a bounce. Don't come one day later and say, you see, you're wrong, Bitcoin dominance is up. It will bounce probably as it gets to that lows before going a bit lower in due course. On balance of probabilities, if our scenario casting is right, currently it's endorsing our views of what is a key level and what isn't and how it's due to perform. All these things we've said, maxis are going to be strutting, has happened. They're going to pause for a while, less their way. 42.5 and 47.5 key levels of significance. Clear price behavior proof. It has happened. You needed to cut back down at the 47.5. Where's those charts one more time? If you doubt it, have a look at it. That is how you overcome key levels of significance. First by feigning it, then by smashing it, sine waving, dolphining, and then squeezing around it so it becomes like that, and then supporting on it. Now what happens, given the scale of that, a weaker rally, if you are over leveraged and you need to get out, a weaker rally of some form between the 44s to the 45 and a bit, you could potentially get out if this was to be a head and shoulder, or even just to go sideways and churn. There should be some rally off the 42.5. It's a well-established support. However, it might hang heavy for a while. If it doesn't and it just goes into spill mode, the next point is the 40.5. That means you're now running into a potential megaphone structure over here if you were to run the 40.5. So that's your next key level of support, 42, and that means you'll then be in those lower 30s. It will depend whether it's an ascending or a descending megaphone on a bull pole. We teach you that theory and we will assess it once we have the information. Until then, we can't say. So I would suggest for those that don't have the benefit of our updates in the community, you could reduce any holdings on potentially all cryptos, because I think the alts can still be affected, although they'll do less badly. Some of the key ones will hold up a bit better because of that ETF wildcard still in the mix for them. Hasn't been confirmed, but you could reduce holdings on all cryptos while Bitcoin is here. Any rally into that space will bring all of the ships up a little bit, and that way you can make sure you don't get hammered. In short course, we go up again, and the triggering event will be 47.5. However, we will aim to be early once we see the rounded bottoming and all the signs to get back in, and then we'll be loading up on a lot of our favorite alts and of course possibly a bit of Bitcoin. I've said all I can say. Thank you for the support. Be careful. You've got to maximize this. Small decisions, big compounding effect. Duration of compounding small gains over a full bull market, over a full year, is the way you build your wealth. Okay, you know what to do. Click the link, likes and shares. We appreciate. Have a good weekend. Bye for now.